The stock market has logged its second straight weekly loss, with preliminary readings on economic activity showing further deterioration. Business conditions appear to be worsening as 2022 comes to a close, shown by a steep fall in the Purchasing Managers Index, and this is indicative of GDP contracting in the fourth quarter. Meanwhile, jobs growth has slowed to a crawl in both manufacturing and services, along with a slump in consumer demand. So forget about a soft landing in 2023. Should the Fed achieve its goal of reducing inflation, it may be a punishing recession next year. And you may not want to hear this, but the bottom for this bear market cycle may not be in place yet. Although we did have an October low, no bear market has ever bottomed before the recession started. Right now, we're still facing the most predicted recession in history. That being said, we don't necessarily need to see the full breadth and depth of the recession. We just need to see the start of the recession. Based on my best guess, the stock market will likely bottom in the first half of 2023, when economic and earnings forecasts on Wall Street better reflect the downturn. Only then will a stock market rally. And so two charts today, beginning here with the 2-year weekly chart on the volatility index. And you can see in the upper left, the symbol is $VIX using stockcharts.com. We've been watching this nice dish here, as you can see, bottoming and basing there, and then the move on up. However, the most recent move down was, say, equal, perhaps maybe even a bit lower than the previous downturn. So, for a number of reasons, it looks like perhaps the VIX is weakening. This high here seems to be maybe a little bit stronger than this high here, which seems to be a little bit stronger than this high here. We're watching this bottom, base, and move on up. We want to see how high that goes to see if it continues to weaken. If it does continue to weaken, then that may be setting up for a nice strong rally in the stock market. But this is going to take a couple of weeks to perhaps a month or two. Now, looking in the lower portion of the chart, you can also see the MAC. We have this top here, higher than this top here, higher than this top here. So definitely also a weakening. You can see that on the top line as well as on the bottom line. Here, we're not quite bottomed yet, but it looks like it's bottoming and basing and perhaps wants to turn up, and we'll have to see how strong that move is. But I sense that things are weakening in the VIX. And again, if the VIX is weakening, that means the stock market is strengthening. So let's go now take a look at the charts. Sticking with a 2-year weekly theme, we're looking at the spiders, the SPY, and the close on Friday was 383.27. And as you can see here, this is the top of the channel moving through like that, and then the bottom of the channel moving through more or less like that. So this top here obviously lower than this, lower than this. So of course the stock market has been weakening both on the top line and the bottom channel line. So what we're looking for though is perhaps some slight indication of strengthening, but that's only going to come perhaps down here if we say test this low. I want to see where we test. If we can test that and we're still above that, perhaps we'll have a bottoming and basing working its way into the market. Not real sure yet. We got to watch this. We saw this reflection coming from a mile away, but everybody else has as well. So that's when you have to be careful, is when everybody knows the same information. We'll watch this come on down, and I think everybody is going to be looking for perhaps a lower low, as we have been moving all the way down this trend line. So I'm not going to look for a lower low. I'm going to look for perhaps that head and shoulders, as we've talked about for several weeks now. Moving here, volume shows not much, a decline, which is not necessarily great, but it's not necessarily bad either. But into the MACD, you can see this is just slightly improving. So I want to see where this fast line comes down and bounces and moves on up. Is that bottom and basing going to be higher than the previous bottom and basing, and previous to that bottom and base? So we're looking for some strength in the MAC, and we'll also look for some strength in the histogram as well. And we don't really see too much of that yet, but we do see certainly here that is improving. So I want to see how the histogram sets up and if it can bottom and base at a slightly higher level than the previous levels. Moving on here into price rate of change, that still continues to go sideways. Just not too much movement one way or the other. It's not giving us good indication. Here, relative strength does show a bit of improvement. Hopefully this again will sawtooth down and bottom and base in that area there, just below that 50 or midline. And you'll be looking for the same sort of improvement perhaps in the stochastics, though this low here was about at the same level, yet it was worse simply because of the length of time it spent. So this is actually a little bit better of a bottom. So we'll see what the next one proves to be. And then here into the Williams. Williams is coming on down as it should. I would imagine it could come down here, maybe above that 80 level, or maybe into that oversold territory. We'll just watch that. This is going to be one of the first oscillators to make its move back on up, so keep an eye on that. But back here to the price chart, I think you know the drill. We're looking for that channel to continue. However, we're looking for a bottoming and basing in the price chart, hopefully above this level, maybe equal to that level, but something to show some strength coming into the market, and that's going to help us identify perhaps when the market's going to turn. And for today, that's ChewDog Charts. Thank you.